Hello, everyone, and welcome back to Financial Market Insights for Traders. I'm your host, Sophia, and today we are diving deep into one of the most important and rapidly evolving sectors in the global economy, agriculture commodities. In today's episode, we'll explore the agriculture commodities outlook for 2026, including the growing impact of food inflation and climate risks, the role of geopolitics, energy prices, and supply chain disruptions, and why agricultural commodities are becoming increasingly important for traders and investors around the world. Now, agriculture may not always get the same headlines as tech stocks, central bank decisions, or cryptocurrency markets, but make no mistake, agricultural commodities sit at the heart of the global economy. Every country depends on food supply chains. Every consumer feels the impact of rising food prices. And every major weather event now has the potential to ripple across global financial markets. What makes the agriculture commodities outlook for 2026 especially interesting is that we are entering a period where multiple global pressures are colliding at the same time. We are seeing climate instability intensify. We are seeing geopolitical tensions disrupt trade routes. We are seeing energy prices influence fertilizer costs and transportation expenses. And at the same time, global demand for food continues to rise. So let's start with the biggest theme driving agricultural markets right now, and that is volatility. The agriculture commodities outlook for 2026 points toward continued price volatility across nearly every major commodity market. Whether we are talking about wheat, corn, soybeans, coffee, cocoa, or sugar, traders are facing a market environment where supply disruptions can emerge very quickly. One major reason for this is climate change and increasingly severe weather conditions. Over the past few years, we've seen drought conditions affect wheat production in parts of Europe and North America. We've also seen flooding in parts of Asia damage rice crops and agricultural infrastructure. Heat waves have reduced crop yields in key farming regions, while changing rainfall patterns have made growing seasons far less predictable. And this is important because agriculture is incredibly sensitive to weather conditions. A prolonged drought in one major exporting region can tighten global supply almost overnight. Excessive rainfall during harvest periods can damage crop quality and reduce exports. Even a small disruption in production can lead to sharp price movements in global commodity markets. That's why food inflation and climate risks are now deeply connected. When crop production falls because of droughts, floods, or heat waves, food prices tend to rise. But climate risks also increase farming costs. Farmers may need more irrigation systems, more crop protection measures, or additional fertilizer use to maintain yields. Transportation networks can also be disrupted by extreme weather events, creating bottlenecks in food distribution. All of these costs eventually work their way through the supply chain and affect consumers. And this is one reason central banks are paying such close attention to food inflation. Rising food prices don't just affect grocery bills. They can influence overall inflation expectations across the economy. In many developing economies, food represents a large percentage of household spending. So when food prices rise sharply, it can create social and economic instability very quickly. Now let's talk about some of the specific agricultural commodities traders are watching closely in 2026. First, wheat. Wheat remains one of the world's most strategically important commodities. It's a staple food source for billions of people, and disruptions in wheat exports can have immediate global consequences. The wheat market continues to face pressure from climate-related production risks as well as geopolitical tensions. Export uncertainty surrounding Black Sea shipping routes has remained a key concern for global markets. Countries that depend heavily on wheat imports are increasingly trying to diversify suppliers to reduce vulnerability to regional disruptions. Next, corn. Corn markets remain heavily influenced by both food demand and energy markets. Corn is used not only for food and livestock feed, but also for ethanol production. As renewable energy policies expand globally, demand for biofuels continues to grow, and that adds additional pressure to corn supplies. Weather conditions in the United States and South America remain major drivers of corn prices. Any disruption to planting or harvest seasons can create rapid volatility. Soybeans are another major commodity attracting global attention. Soybeans are essential for animal feed, food production, and biofuel manufacturing. Demand from China continues to play a major role in shaping soybean prices, while weather conditions in Brazil and Argentina remain critical supply factors. Climate risks in South America could create substantial supply volatility throughout 2026, and traders are monitoring those developments very closely. Now let's move into soft commodities because this area has seen some extraordinary price action recently. Coffee markets continue to experience supply concerns linked to climate instability. Brazil and Vietnam, two of the world's largest coffee producers, have faced recurring drought conditions and irregular rainfall patterns. Coffee demand globally remains very strong, particularly in emerging economies where coffee consumption continues to rise. This combination of strong demand and uncertain supply has supported elevated coffee prices. Cocoa markets have also experienced historic volatility. West Africa remains the dominant cocoa-producing region globally, but poor harvests, aging plantations, crop disease, labor shortages, and adverse weather conditions have all constrained production. As a result, cocoa prices have surged significantly in recent years, and chocolate manufacturers continue facing higher production costs. Sugar markets are also increasingly complex. Sugar prices are now influenced not only by food demand but also by energy markets because sugarcane is used for ethanol production in several countries. This creates a direct relationship between energy prices and sugar demand. And this brings us to another major factor shaping the agriculture commodities outlook for 2026: energy markets. Agriculture and energy are far more connected than many people realize. Fertilizer production depends heavily on natural gas. When natural gas prices rise, fertilizer becomes more expensive. Farmers then face higher operating costs, and in some cases they may reduce fertilizer usage to manage expenses. That can negatively impact crop yields and tighten global supply. Oil prices also matter because agricultural products need to be transported across the world. Rising fuel costs increase shipping expenses, storage costs, and overall supply chain costs. This means higher energy prices can contribute directly to food inflation. Now, alongside climate and energy risks, we also have geopolitical uncertainty continuing to influence agricultural trade flows. Several countries are increasingly prioritizing domestic food security over exports. Export restrictions and trade barriers can emerge quickly during periods of supply stress. Shipping disruptions, sanctions, political instability, and currency fluctuations all have the potential to affect agricultural commodity prices. And this is why traders today need to think globally. Agricultural markets are no longer isolated regional markets. They are deeply interconnected with macroeconomics, geopolitics, energy markets, and even monetary policy. At the same time, technology is transforming how commodity traders operate. Modern traders now have access to real-time data, AI-driven analytics, mobile trading tools, and advanced risk management systems that simply didn't exist a decade ago. Having reliable technology is becoming increasingly important in fast-moving commodity markets where prices can change rapidly based on weather forecasts, export announcements, or geopolitical developments. For traders looking for a world-class and user-friendly trading experience, I highly recommend checking out Crystal Ball Markets platform at crystalballmarkets.com/platform. It's a cutting-edge trading platform designed for modern traders who want access to advanced tools, market analysis, and a streamlined trading experience across commodities, forex, and broader financial markets. If you're serious about improving your market access and trading efficiency, definitely explore the platform and see how it can support your trading goals. Now, another point I really want to emphasize today is education. Agricultural commodity markets can be extremely complex, especially for newer traders. Understanding inflation trends, climate risks, central bank policy, energy markets, and geopolitical developments takes time and continuous learning. That's why quality educational content has become more valuable than ever. For anyone looking to improve their understanding of trading, investing, macroeconomics, and financial markets in a beginner-friendly way, I also recommend listening to the Crystal Ball Markets podcast at iss.com/podcast/crystalballmarkets. It covers market trends, trading strategies, macroeconomic developments, and financial insights in a format that's accessible for both beginners and experienced traders. It's a great resource if you want to stay informed while building confidence in navigating global markets. Looking beyond 2026, agricultural markets are likely to remain strategically important for investors and policymakers worldwide. Governments are increasingly investing in climate resilient agriculture, precision farming technologies, water management systems, and supply chain modernization. Agribusinesses are also adopting new technologies designed to improve efficiency and reduce vulnerability to climate disruptions. But despite these advancements, short-term volatility is likely to remain elevated. Global population growth continues increasing long-term food demand, while climate instability continues affecting supply. That combination alone creates a very important long-term backdrop for agricultural commodities. So, as traders and investors, understanding the relationship between food inflation and climate risks will remain essential in the years ahead. Agricultural commodities are no longer just about farming. They now sit at the intersection of macroeconomics, geopolitics, sustainability, energy markets, and technological innovation. And that means opportunities will continue emerging for informed traders who stay educated, adaptable, and globally aware. That's all for today's episode of Astra's Financial Market Insights for Trader Star. I'm Sophia, and thank you so much for listening. Stay informed, stay disciplined, and I'll see you again in the next episode.